Subscribe to my channel Report Stock.
Welcome back to the Deep Dive. Today, we're really getting into Meta Platforms. It's a company that, well, it's always making waves on Wall Street, isn't it? Especially now, after these latest earnings.
Absolutely.
You might think you've got Meta figured out, but honestly, there's a remarkable story unfolding here. We're talking about incredible financial consistency, some really audacious investments in AI, cutting-edge stuff, and strangely, a whole segment losing billions, which somehow is still just seen as a drop in the bucket. It's kind of fascinating.
It really is.
So our goal today is to unpack how Meta keeps doing this, how they keep defying expectations.
Exactly. And our mission really is to pull out the absolute must-know pieces of information about Meta's recent performance. We'll look at the financials, that powerhouse ad business, and these big, ambitious AI bets they're making.
Right.
We want to give you, the listener, that shortcut, that distilled knowledge, so you really get what's driving this tech giant. It's interesting how these different parts, they seem separate, but they really fit together.
Okay, let's start with that financial streak then. Because the latest results, there was something else. The EPS earnings per share came in at $7.14.
Yeah.
Which was way above the $5.89 most we're expecting.
Significant beat, yeah.
And revenue, too, $47.52 billion. The street was looking for, what, $44.83 billion?
That's right. Another solid beat on the top line. And predictably, the shares reacted positively, up about, 8.5% after the numbers came out?
So it's not just good numbers, it's how good they are compared to expectations.
Exactly. But what's really extraordinary, and this speaks to that consistency you mentioned, this was their 11th straight earnings beat.
11 in a row.
11 consecutive quarters beating estimates. Just think about that track record, that level of reliability.
That's pretty unusual.
It is. And when you add in the double-digit growth for both EPS and revenue, well, that combination makes Meta a kind of rare trifecta for investors.
A trifecta? How so?
Well, you've got rapid growth, you've got that amazing consistency in beating expectations, and they have strong liquidity. Lots of cash. So it hits all those key points.
Okay.
It's really no surprise it's become what people call a hedge fund hotel.
Right. Meaning lots of big funds hold it.
Precisely. It's a consensus pick, widely trusted. And, that's backed up quantitatively, too. It's got a Zacks rank, #1. That's their highest strong buy rating.
So the numbers are strong, the consistency is there. What's the real engine behind all this? What's driving this performance?
It really comes down to the advertising business. That's the core.
Okay.
I mean, it's obviously the lion's share of their revenue, but it's more than that. It's also the clearest signal, the best indicator of how those huge AI investments are actually paying off.
Interesting. So the ad performance tells you if the AI is working.
In a nutshell, yes. If the ad business is firing on all cylinders, it strongly suggests their AI strategy is hitting the mark.
And the latest numbers seem to support that idea.
Absolutely. Look at the specifics. Ad impressions, so the number of ads shown, jumped 11% year over year in Q2.
Okay, 11%. That's a solid increase.
It is, but it's not just volume. The average price they got for each ad also increased, up 9% year over year.
Right, so more ads being shown, and they're getting more valuable.
Exactly. More demand, better pricing. And if you want to connect the dots, these metrics are directly tied to Meta's huge AI optimization efforts.
How so? Explain that connection a bit more.
Well, Meta is pouring resources into sophisticated AI models. These models are constantly learning and refining how ads are delivered, who sees what ad, when, where. It's about maximizing relevance and ultimately effectiveness for the advertiser.
So the AI is making the ad system smarter, more efficient.
Precisely. It's that AI working behind the scenes that's helping the core advertising engine perform so well. And that translates directly into that really robust 22% year-over-year growth we saw in the ad segment overall.
22% growth, that's significant.
It's very significant. And it really validates those massive AI investments they've been making. It shows they're not just spending money, they're getting tangible results in their main business.
Which brings us nicely to Mark Zuckerberg's big AI pivot, right? That's been the narrative for a while now.
It has indeed. This massive pivot to AI is central to their strategy.
And how's the market taking that? Because it involves, a lot of spending.
It does, and that's where the CapEx figures come and capital expenditures. Meta is spending aggressively here. They are, without a doubt, among the companies making the most aggressive bets on AI right now. Huge investments in servers, data centers, chips.
Right, building the infrastructure.
Exactly. And crucially, investors seem to be on board. They're actually applauding this bold strategy, this aggressive spending.
Even though it costs a lot up front.
Yes, because they see the long-term potential. They understand that leadership in AI could be incredibly valuable down the line, both for improving the current business and for, potentially creating new opportunities.
And we see that confidence reflected in the stock price, too.
We do. Meta shares recently broke out from yet another base structure, another period of consolidation on the charts.
Okay.
And if you look at technical analysis, things like Fibonacci extensions, some analysts are putting out price targets for 2026 in the $900 to $1,000 per share range.
Wow. That implies quite a bit of upside from here.
It certainly suggests strong long-term conviction from the market, yes. A real vote of confidence in this AI-focused strategy.
But it can't all be smooth sailing, can it? Are there potential headwinds or challenges we should be aware of?
Oh, definitely. No company operates in a vacuum. One thing management has guided for is accelerating expense growth next year.
More spending.
Yes, including another substantial increase in that CapEx for AI. And, higher spending could potentially pressure profit margins, at least in the shorter term. That's something investors will watch closely.
Okay, that makes sense. And what about the other big bet, Reality Labs, the metaverse stuff?
Ah, yes. Reality Labs. That's the other side of the spending coin.
It's still losing a lot of money, right?
It is. The segment continues to hemorrhage cash, is the term often used. It cost Meta about $4.5 billion in the last quarter alone.
$4.5 billion.
Yeah.
Just from that one division.
Yes, it's a staggering amount. And that poor financial performance, it's definitely a troubling trend if you just look at it in isolation.
So should investors be worried about that drag on the company?
Well, here's the perspective most investors seem to be taking right now. While $4.5 billion is obviously a huge number, in the context of Meta's overall business,
It's relatively small.
it's often described as merely a drop in the bucket. Meta's core ad business is just so massive and profitable, it can currently absorb those Reality Labs losses.
So it seemed more like a long-term R&D project almost?
Kind of, yeah. A big swing for the future, maybe the metaverse, maybe something else, but not an immediate threat to the company's financial health today. The primary focus for investors remains firmly on that core ad business. But, and this is important, Meta will need to keep delivering those strong earnings from the ad business to justify continued aggressive spending, both on AI and on Reality Labs. Investor patience isn't infinite.
Right. The core needs to keep performing to fund the future bets.
Exactly. That's the balance they need to maintain.
So wrapping this up then, the key takeaway seems pretty clear. Meta is still showing really exceptional financial performance.
Absolutely.
And it's being driven by that super robust ad business, which itself is being significantly boosted by all these AI investments.
That's the core story right now, yes. If you connect all the dots, you see Meta is in this interesting position. They have immense current profitability, largely thanks to AI optimizing their ads. And that profitability gives them the financial firepower to make these huge aggressive bets on the next wave of AI and other long-term innovations like whatever Reality Labs becomes.
So balancing today's profits with tomorrow's potential.
Precisely. And the market, at least for now, seems quite comfortable with that strategy. They're rewarding that forward-looking approach.
Okay, so maybe a final thought for our listeners to consider. Given how deeply Meta is weaving AI into its main business, its ad engine, and how that AI-driven optimization seems to be accelerating, how might this fundamentally change the digital landscape? Not just for Meta, but for you listening, whether you're a user seeing ads, an advertiser trying to reach people, or even a competitor trying to keep up. What does that escalating AI optimization mean for everyone else in the coming years?
That's a great question to ponder. The ripple effects could be quite significant.
Something to think about. Thanks for joining us on this deep dive.
Subscribe to my channel Report Stock.